anything at surface, although what I'm sharing this morning, because it is going to be recorded, is coming straight from documented places. I'm actually going to share my PowerPoint here when we get going. But I will tell you that one of the IRS rules is for a home-based business is you can claim a loss for up to 2 years. So, and by the way, my dad is a CPA now of 40 years. So I've been raised in a CPA family, although I'm the least analytical person in the world. Broke my dad's heart. I didn't want to take his business over, but I did not. Had no interest. Don't regret it at all. But I have lived it, so I know a lot of it. And it was one of the things that really caught my attention the very first year we were in the business. And I don't remember exactly what we made the first full 12 months in network marketing, but it was somewhere, I think maybe around 30 or 40,000 that we made. The first full year, I think that would probably already been in 5 or 6 months that previous year, and we didn't make very much at all. So what my dad was able to do was all these deductions I'm about to go through with you. He was able to completely write off all of our earnings. So we paid no taxes on the income we made in our home-based business. But he also was able to take some of the deductions that we had and apply them against my W-2 earnings.
We'll go ahead and get started. I see we have our
from the school system. And so he actually got more back of my teaching taxes withheld than I had gotten back in previous years. So it was like a win-win-win across the board. We made extra money. We didn't have to pay taxes on that money. And then we got even more taxes back. So the number one thing to understand with the government is nothing matters until you're audited. And you may or may not be audited. It's kind of but when you are audited, Ashley will tell you, because we've been audited twice, you've got to have every single thing documented with tremendous clarity. So we've got Jerry Wyndham's going to be a co-host with me. Go ahead and spotlight Jerry and I, if you don't mind, Anthony.
And as a disclaimer, the tax laws change every year, every couple of years. So what applied, 20 years ago might not be applying. So always go to your accountant, please.
So Jerry, as I'm sharing my screen, Jerry has also used my dad's firm. My dad's partner, I think, is actually Jerry and Allison CPA. But Jerry's owned businesses his entire life. So he's been in small business for 30 plus years. So he was well ahead of the game before he got into network marketing. But Jerry, anything you want to share there? And then I've got, I'm going to pull up all the tax breaks as you're doing that. And then we'll kind of go through them together. And then at the end, we'll tie it together with the system that you use to track everything. But anything you want to preface in the beginning?
Well, just that you were, keep everything as documented as you can. And with today's technology, since we're all using this anyway to sell our business, just incorporate that, and it makes it so much easier. There's no excuse not to really do it.
Okay. So what I'm about to show you, you can Google, because I didn't want to get off track at all on a recording dealing with government money. So let me get this. Okay. So the actual number is you have 157 tax breaks the second you joined network marketing. There is a lady named Courtney Epps. You can find her on Facebook, Courtney Epps. Ashley and Anthony are going to send out a YouTube video recording of her being interviewed by Laura Sells for an hour. I encourage you to look her up. She also really specializes in network marketing. My dad has been pretty sick lately, so Ashley and I are actually probably going to move over to her either this year or next year at my dad's suggestion, just because he doesn't have the energy that he used to have to help us. So let's kind of start here. So these are kind of 26 small business tax deductions put out there by LendingTree to kind of keep in mind. And Jerry and I will just kind of go through them. But number one is startup expenses. Startup expenses would be the $29.95. That is a tax deduction. You bought a business with that startup. And then, Jerry, you've got a formula that you use for products, because my dad is very particular with us on products. Because if you personally consume the products, it is not a write-off. So, Jerry, share how you then deduct, how you kind of manage your product purchases as far as tax deductions?
Yes. So my personally consumed, I try to keep everything on that on my auto ship. So I separate the auto ship from my purchases, and that's going to be my personally consumed stuff. Now, of my purchases, I will sell 10% of that, and I will claim tax and sales tax and stuff like that on that as well.
Okay, so then business supplies, and this is a huge one because we all know in this business, we've got to have a smartphone, iPad, tablet, computer, laptop. All of those things are now necessary because we are a global virtual franchise. That's how we work our business. That's in lieu of a big office space, big building, or whatever it may be. So if you built a $2 million building, that would, be a write-off against earnings. But the same thing with buying laptops and things like that. Papers, copies, folders, notebooks, anything that you're going to be utilizing for your business. And again, if you're not audited, it doesn't matter what you write off. But if you're audited, you have to have documentation of not only what you bought, the receipt, or put into an app or tracked on a credit card. There's multiple ways to do that. We're going to cover all that at the end. But then you have to have the application into your business. So Jerry, what would you like to add there? You're muted, Jerry. Still muted, Jerry. There we go. Okay. I'll go forward until he gets fixed on his side. I'm not sure what happened.
I'm fixed now. I'm sorry about that.
Okay. That's no problem. Go ahead.
So I didn't hear what you said because my audio went out.
I just covered business supplies on computers, laptops, phones, notebooks, any supply needed for the business, and just the correlating documentation of receipt, credit card, where it was purchased, or app like you're going to share at the end, and then if you are audited, the correlation into your business.
Yes, I mean, this is a business, just like all my brick and mortars. I mean, anything that I do for a brick and mortar, I can apply right here to my house as well. So I have set up an office space downstairs. I have the square footage matched against my house. So I'm going to take off, all those portions of everything. And then my computers, my phones, everything, just like you would there, just document what, if it's over a certain amount, and you can talk to your accountant about that. I mean, I know the Section 179 stuff is a lot more lenient now. So a lot of that's going to be expensed off much more quickly, but you do have to designate anything over a certain number as, equipment instead of just writing it off typically.
And then Jerry, I know you just bought a brand new Apple MacBook Pro, which I know is probably a couple $1,000s, but that's 100% deduction, correct?
That's correct. That's my understanding at this point. It's because of the new Section 179 stuff.
Yeah. So, for some of you that are going to be getting technology items for your business for Christmas, that's still documented expenses. So if it's family buying for family, like your husband buying for the wife or something like that. Now, if your mom gives you that outside of it, I think that gets a little tricky, more than likely, right, Jerry? It would have to be kind of within the family business.
Yes. You need, and keep your documentation. I mean, or get it, however you do that. So you're going to claim it, you need the receipt.
Yeah. And anybody's welcome to throw questions in the chat as we go through this. And Ashley, you'll have to kind of keep an eye on that and moderate that for us, but you can, bring it up and ask. And if anybody else is an expert on this kind of stuff, raise your hand and we'll bring you in to the discussion. Okay, so we just kind of covered software and electronics. It's kind of the same as business supplies. But here's the really big one. And I get this question a lot. And that is, should I do an LLC? Should I do my Social Security number? Should I do an S Corp? And I never have the answer because they all bring, different things to the table. Especially the S Corp, can give you some layered protection from being sued, different things like that. So it's always personal discretion. I will tell you that mine and Ashley's business, we've done it all through the years, but the whole time we've been here, we have been in our Social Security number. And the reason for that is the home deduction is really simple there. You don't have quite as many moving parts as, especially when we had the S Corp. I know Ashley had to do a lot of finagling to make all that documentation work. So we're not even going to go there on this call. We're not the experts there. You got to have somebody who knows what they're doing on that. But on a Social Security number, it basically is this simple. If you are, and everybody here is, working this business from your house, you need to make a designated space. And my dad and I just had this conversation Thanksgiving Day, because I have for those that have been to my house, I have a 2,000 square foot game room / office / big projector that I do meetings in and do all these Zooms from. But it has a pool table in it. And so my dad was saying, because I write it off. We have a 4,000 square foot house. That's 2,000 square foot. So whatever percentage you're going to write off, it applies now against every bill in your house. So for this house, that's 2,000 square feet in a 4,000 square foot house. That's 50% of the house. So that means 50% of our house note, 50% of our electric bill, 50% of our water bill, homeowners insurance, everything is 50% off. So the discussion that my dad and I had over Thanksgiving was based upon this room being used for anything else. So what I told him was, all of our kids are going to college now. We don't have anybody at home. The only time this room is used is for business. And, we do events here. We have get-togethers, trainings, all kind of stuff. And it's really just, it's empty when I'm not using it. However, if all 4 of my kids were still home and they were having, friends over and playing pool, my dad was sharing that we'd have to kind of figure something out there to figure out the percentage we could write off. So you've got to have it a clean slate if audited. Anything you want on that, Jerry?
Yes, I'm gonna have to check because you threw one at me. I wasn't even thinking about it, but you said your house payment for my space as well. So I'm going to follow up on that one. So yeah, that's good.
So let me ask this. So I've got a couple of people asking so Jerry, if you've got a couple of businesses. So if you have a real estate business, somebody's asking, and they already write that home office off, how do you split between the two? Do you have another set office, or how do you do that?
I only write it off on one. I don't write it off on the other one. It's either, I can do it on either. I do have a real estate business as well. I do manage properties and all my records are down there as well, but I don't count that expense there. So I only count it on one.
Yeah.
Okay.
And Jerry, if I don't know if you can share your screen, you may have private information, Jerry, but if you could at the end, Jerry's going to go into the app he uses. Now, Jerry has a full-time CPA too. I mean, he's got a lot of businesses. He moves a lot of money through those businesses, but he uses an app that documents all of his businesses. And this app asks, if he drives somewhere or whatever it is, it's going to ask which business to designate that to. And by the punching of a button, it throws it in which category. But Jerry, I'm going to agree with you there. I do not believe you could deduct twice. I think it's going to have to go to whatever business you so choose. I don't think there's any other answer to that.
Well, it's like your car. You can either write it off, on one company, but you can't write it off twice. You can't write your car off like a section 179, then take mileage on another company because you're using the same car.
So we have somebody on that's a CPA, Jeffrey Faust. Do you want to?
Oh yeah, bring him in, please. Yes,
so
yeah. Come on in, Jeffrey.
So this is a question like Jerry goes back to, and he alludes to this, or I guess this is Leslie. She talks about this, that somebody asked about the auto ship because it does have a point value requirement. And is that not a write-off? And she responds, Leslie, are you here?
I can tell you what my dad says on that. But there may be varying answers. So I would love to know what others said.
Yeah. So there is varying answers on that. And so what she is saying, or I don't want to get it wrong, but because it is a requirement to keep your business active, that is a write-off. So it really kind of goes back to understanding and knowing this industry. And
yeah, so actually I want to add one thing there though. So it is 100% write-off if you're only buying that to keep your business qualified. There's zero chance it's not. However, where it gets fuzzy is if you personally consume that product that's coming on your auto ship. So I don't write it off because we have been audited twice. We've passed both times with flying colors, thanks to my wife and my dad. Nothing to do with me. They hate me all the time because I'm terrible at keeping up with stuff. But we don't write it off because of the fuzziness of it. Jerry, if you want to add something there, you please do.
Well, I get both sides of that argument. I really do. And coming back to it, and I'm going to get back down with Benny and really kind of discuss that, because if it is a requirement, I totally agree that, and you can do it either way, but you're going to have to designate X amount of product one way or the other for your own personal consumption. Because as an auditor, I wouldn't buy, you're buying all this stuff and you're not using it for your own personal consumption. So I would have to have some formula, some basis of something. So this just seemed like an easy function for me, but you can do it a totally different way if that's what you want.
Yeah. And two, I think it also goes because this industry is, there's still a lot of gray there. And it's really, if you're going to, when you get audited, it's all about who's sitting in front of you and what they are for the day. So, and how they're feeling for the day. I know. So anyway, cause I mean, I know somebody that has actually, been audited that's in this industry and was able to write off lawn care because they didn't have time to do their own lawn. So they had to pay. So again, it's all about who's sitting in front of you and how much you want to push that envelope. And I don't ever recommend pushing an envelope. So
Free, you're with us now. So you're up now. So Jeffrey, anything you want to add there? Jeffrey is a CPA, I believe. Go ahead and give everybody your background, Jeff.
Yeah, I'm an accountant. I have over 20 years. I'm new to this particular business. I've been with other network marketing items. I have a few clients that participate in and everything. So I actually enjoy this type of marketing and all that stuff. So, but yeah, so generally speaking, as far as the membership aspect, obviously you have to have 100 points. If you're auto ship to hit that, that membership to have your business active, if you have everything under there and you're spending $1,000 to get that, obviously that's it's a little big. So I might recommend, obviously 100 points is going to be somewhere between 100 to say $150 that you're going to do. Obviously, that's going to be deductible. But if you have, the drops, the shakes, your noni juice, everything that you're going to consume, and you're saying that is a business deduction, even though you're going to consume it, obviously you're going to have an issue depending on the auditor that's sitting in front of you. So the mindset that you kind of want to have when you're playing this game is, all right, if an auditor was sitting in front of me, can I make the argument? I think the lawn might be a little hard to do because, I have too many kids. I could have one of them mow my lawn. To go back to the house deduction, the best thought line to have is you get one bite at the apple. So if you have everything deducted on your house, the office space and everything, and you're taking that with your real estate business, you can't turn around and take it over on another business. Now, if you have a specific space, so like you have a like a garage area where you're storing your supplies that you're going to sell to your clients, then of course you have a division of the two items, so you can go ahead and deduct that portion there, and you should have very little issues because obviously if the auditor shows up, you can be like, here's where it's at. So
okay, so 5 and 6 rent and depreciation. So I'm not sure exactly how this falls in. I was just reading what they were saying about the rent or depreciation. I will tell you where we use, and I'm not sure this is the one. It may show up again in a little bit, but I'm going to go ahead and add it in because this is one of our biggest write-offs. So if you do buy equipment, specifically a car, which is the equipment we really need in this business to get to our meetings, and that car does weigh over 6,000 pounds, you can depreciate the entire thing at once. Meaning that if you went out and bought a $75,000 vehicle and that was going to be exclusive to your business, you have to be full-time at this to write the whole thing off, I would assume. You kind of got to have a percentage depending on how much you work in this business, but we're full-time at it. So my dad does depreciate, and you can only do it once every 3 years per person. So I can deduct a full car once every 3 years, and Ashley can deduct a full car price once every 3 years. As a matter of fact, my dad has just asked for a summary of my 2023 income so he can figure out if we should buy a car for Ashley or not in December, or just put it all into a retirement account, which we'll talk about in a little bit. Anything Jerry or Jeff y'all want to add there?
That was pretty to the point there. Very good. Yeah.
Okay. All right. Then utilities, phone, and internet, it's going to be the same exact thing. So utilities is really simple. That's the percentage of your office space at your house. So if you're using 10%, which would be 10 to 15 to 20% would be a normal office of the square footage of a house, then that percentage can be deducted. And then phone and internet, my dad and I actually battle about this a little bit, because my dad, obviously, he's the CPA. He's the one responsible when this thing gets submitted. But so we do deduct 100% of our phone and internet, because I couldn't survive without my phone. But he obviously will say, well, you do use it for personal use. You enter your kids on it. I do, but I will tell the auditor that I use this phone 24 hours a day. All they got to do is go check my text messages and my phone calls, and they will see it clearly. So Jerry or Jeff, any clarification further on those?
As long as you're using the phone, it's having gone through an audit on this before, it's about 75%. So if the say your cell phone or the internet, if 75% of it is used for a business purpose, go ahead and deduct 100%. So if you find yourself, I post one thing a week, at that point you're going to start to run into an issue. But if you got the post there and everything, this used to be a huge hot topic, like say 10 years ago. Nowadays they'll let you deduct it. So 100%, especially with this type of business where you're posting on Facebook and the social media. Absolutely.
Okay. So in my case, I think I kept my home number, although it just goes to a message, but I do pay a fee for that every month. So I keep that. But for me, I've said, well, my home number is my home number, but my business phone is what I work on all the time. So I try to have both.
And what Jerry Wyndham just said, that's probably the cleanest way where you would have no argumentative deal. So you could pay $10 a month for another line for personal use, and then you have that. And I'm going to remind you here, and Jeff, any clarification, because I know tax laws are always changing, and I don't have any recent knowledge of this because this occurred for me years ago. But during the first 2 years, all this stuff we're talking about will go against, let's just say you made $3,000 your first couple of months here at the end of 2023, and it very quickly run up $3,000 worth of write-offs. But after we get done with all these, we run up $15,000 worth of write-offs. Jeff, is it accurate still today that they can deduct the $3,000, pay no taxes on their 1099 from Partner Co., and then take the other leftover amount and apply it toward W-2 earnings or another small business that had profitability?
That would be correct. Yes. So based off of your income, because you're going to get taxed as a whole on your income. So your W-2 wages, your other businesses that you have. So as long as you're participating, to use the correct terminology, within the business, you can actually deduct any losses that you have, say, with the first year of business against that. And then it is usually about 2 years that you can produce a loss before the IRS starts to show up and go, all right, are you really doing this to make money? Or are you using this to generate a loss so you don't pay any taxes? So yeah. So if you have the W-2, say if you lost, using your example where you had, say, $15,000 extra of losses, that would obviously be offset by your W-2 income, which could obviously help you, if you have children, qualify for your different child tax credits, and obviously get more of a refund as well.
So I have a question for Jeffrey there, if you don't mind, because I think what you're saying is what I'm thinking. But say, for instance, I have I'll get 5 K1s. Now sorry, I didn't mean to raise my hand. But I'll have 5 K1s. So I'll have maybe 2 losses in there, probably. So is that, when you say 2 years, are you looking at 2 years per company, or is that overall? however
It
it
would
looks.
it would be 2 years per company, and it's generally I would say the first year. What I tell most of my clients when they're sitting here, I said that first year you just started a business. Most businesses, and I'm sure Jerry, you can attest to this. That first year, you're going to be buying the equipment, you're going to be buying supplies, you're going to be buying everything to do the business. You actually generate a much larger loss. So I would say that first year, if you came to me and you said you lost $20,000 to $30,000, I'm not going to blink an eye. Now, if that second year you come in here and you tell me you lost, say, $60,000 to $70,000, I better see some equipment, some big stuff, because the IRS is, they're not dumb. They would sit there and go, okay, if you lost, say, $20,000 to $30,000, say that first year, they would expect to, okay, maybe you're going to lose somewhere between, say, 10 to 15, maybe. In that third year, that break even is kind of where you aim for, and then after that, obviously need to see improvement as far as the income situation goes, or you're going to be sitting in front of an auditor, which is always exciting.
So,
So
Jeff, real quick, because every CPA is not the same. I mean, a lot of CPAs are not really aware of the network marketing industry and all of our tax write-offs. So I don't know if you want business or not, but if you're open for business, why don't you throw your number or email or however you would like somebody to contact you? And if you're already too busy to bring on anything like that, you don't have to do that. But if you do, throw it out there, because people are always asking me who to use, and my dad does not want more clientele. He's past retirement.
Yeah. Well, obviously, my name is Jeff Faust. I work. The company it's called Churchill Rossi and Co. I'm in DeBerry, Florida, but I work with individuals all across the United States, and I do have a couple that are outside of the states, but I'd prefer not to necessarily deal with that. But I would say if you're here in the States, I can help you with your state taxes and all that stuff. My phone number, the office phone number is 407 227 2571. And then you can also shoot me an email. It's Jeffrey, it's Jeffery, and it's at churchillrossi.com. So I'd
Say that
spell
one
that
more.
out.
Say that. Yeah, do your email one more time for us.
It's Jeffrey at churchillrossi.com, and that's Jeffery at churchillrossi.com. And I'm pretty active on Facebook. So if you obviously want to reach out that way, we can go ahead and connect. And then I'd love to sit down, chit chat with you, see, obviously if you need a second look over a tax return that was done just to make sure that the deductions were there, I have no problem with that.
Okay, so 7, 8, and 9.
hold on real quick, Todd.
Go ahead,
Hold on
Ashley.
real quick. Don't mind. How far back can you go if you didn't take your home business deductions? How far back can you go back and amend your taxes for the previous years? Is it 1 or 2 years that you can go back and just amend, or how far back?
It's it's 3 years, open years, so you can go back 3 years. But right now, I would say we're in a gray area, just because that is with the extension. So obviously October
Gotcha.
15th. So right now there's technically 2 years, but if you have something that obviously needs to be amended, if you didn't take those deductions, we can try to throw in that 2020 and see if it would work. Generally, I would give it a 50% shot right now.
Got it. Thank you so much.
Okay, so the next 3, 7, 8, and 9 generally are more applicable to traditional small businesses. But again, I'm assuming, Jeff, that repairs, maintenance, cleaning service, supplies, and security system at the house could correlate again to size of office space percentage-wise. How would y'all classify those 3?
I would say as far as the security and all that stuff, that would definitely, because obviously you're securing the whole house. If the repairs and maintenance are specifically for the office area, you can go ahead and take the full deduction for that. But obviously, if you're, say, doing a whole roof to the whole house, then at that point it would be back to the proportion of the office space.
Okay, so number 10 is, in my opinion, I know for us, it was one of the biggest good surprises we had when we didn't, because Ashley and I knew nothing about business. I mean, she was a stay-at-home mom with our 4 children, and I was a high school football coach. We were not entrepreneurs like Jerry is that's with us. So I never even knew you could write off mileage for a car at that point in my life, but you can. And you got to go one of 2 ways. So again, Jeff, I need your clarification, but I'm because I have to repeat what I've been told, not what I know. But we write off mileage. But if you write off mileage, then you can't write off oil changes and all your gas. You can go one of the 2 ways. You can write off every mile you drive, documented for the business, or you can write off all your expenses, gas, oil changes, whatever expenses that car might need.
Yep, that's correct. Yes, yeah.
Okay, and what is that mileage right now, Jeff?
It changes. That one changes every year. And it would be the mileage that you take for the car. So the best thing, I think it's sitting at 56 cents a mile. Don't hold me to that. They might have made the adjustment, but it's about there.
Jerry Wyndham, you would know because you do it every day.
Yes, it was 58 cents for the first part of 2022, but the second half of 2022 is 61.5 cents. So as far as I know, we're still running in the 61.5 cents a mile.
Okay, so Jerry actually, he's going to share this at the end with the app he uses. Ashley and I do this full time. So we really never go. I mean, truly, we don't go anywhere that the business is not applicable. So we do deduct every mile my car drives. We don't deduct every mile Ashley's car drove, because she used to be the mama running the kids around. But now that she's full-time too, we'll do it both directions. But like with Jerry, because he's sometimes running for multiple businesses, when he finishes a drive, the app he's going to share at the end, ask him what business to apply those miles to. Anything you want to add there? Either of you?
It's 65.5 cents a mile. I just looked it up real quick.
65.5. So that means everywhere you go. So if you drove 10 miles, that's $6.50 you write off. So let's just say you drove to the Florida event from Tennessee, whatever that is, 500 miles. It'd be 500 times 0.65, about whatever that is, about $300 write off straight toward profitability. So you basically, your trip almost self-pays for itself, because obviously that goes back to the cost of coming to Florida, the hotel room, everything is deductible. As a matter of fact, I don't know if it's on this list, but it just entered my mind. I want to make sure everybody's aware of this. It is, and again, Jeff, clarify this because I know this changes too, but I believe right now it's 50% of meals and 100% of lodging, as long as it's business related. Is that still correct? Either of you?
Yes, yeah, that's still correct. It's 50% of meals.
Before this year, that started this year. So
yeah,
it was 100% last year. This year starts 50%.
So, go ahead.
And then the biggest thing is to make sure you use the correct verbiage on the trip. So if you find yourself sitting in front of an auditor, it's not, I went on a vacation to Florida to go to the Partner Co. Meeting. It's, I went on a business trip. I had to get lodging, hotel, and these are the food. So it all comes down to the proper verbiage. So you want to make sure that you actually say, like somebody asks, hey, if I go on a vacation. No, it's not a vacation at that point. It's a business trip. Now, obviously, if you happen to go see some family members and all that stuff, then at that point, you have to start asking yourself, all right, yeah, I might have spent, say, $2,000 for, the business trip, but was it all deductible? In my saying, one of the things that I like to say is pigs get fat, hogs get slaughtered. So, the biggest thing is to make sure, hey, let's take what's reasonable, but let's not take too much. And I would absolutely say if you're, going to another accountant and whatnot, they should allow you to take some deductions, and they should know kind of where that ballpark is. Like, okay, we're getting too big. Obviously you made $4,000 for the year, and you're telling me that you had $40,000 worth of meals and entertainment. I'm gonna tell you that sounds very personal to me. So.
Okay, so just to give you an application there, I wrote this down just now while Jeff was going through that. But if for those of you coming to the Accelerate event in Florida, it will be so wherever you're driving from, it'd be 65 cents a mile that you're going to be able to write off. Or if you fly, it's 100% of your tickets, your rental cars, your Ubers, anything along those lines. On your trip, because it is a business trip, it'll be 50% write off of the meals you're eating on your business trip. If you needed to stay in a hotel en route, it's 100% of that hotel room. Then when you book the Embassy Suites, that $119 a room rate, I think it's a $20 a day resort fee, all 100% deductible, and the $129 or $29 tickets you bought, 100% deductible. So if you'll just keep track of that trip, it doesn't completely pay for itself, but it really goes a long way when you're able to deduct all that against your taxes. Okay, so these are two more really tricky ones. And I don't really want to touch them other than the one that we've utilized some, probably not near as much as we should have, is I do know you can pay your kids here. So, Jeff, I'm going to defer that to you and Jerry to give us the exact answers on fringe benefits and employee pay.
You want to go first, Jerry, on this one?
Well, at this point in my life, as far as for a home-based business, I don't have kids here anymore. They're all grown, but I can say for all of my other businesses, whether I was working them from home or not, whatever, but I did employ all of my kids from the time that they were probably 12 years old until through college. I mean, that was a way for them to earn their own spending money for me. So I have done that, and it was never a problem.
So as far as the children are concerned, there are, we'll first go, depending on what state you're in, there's different benefits that you can do where you might not be paying, say, the payroll taxes and still be able to deduct them. The one item that I have to say as far as paying your family members, your children, or whoever, as long as they're actually doing the work, you can have the deduction. Now, if you wanted to pay your son, say, $100,000 for doing office work, I have children, like I mentioned, so I have them file. I can tell you if I paid somebody else to file paperwork and that's all that they were doing, I would be maybe charging them, say, or paying them, say, $10 an hour or whatever the case might be. But if I decided to pay my son $100,000, at that point, it falls into that same category. It is a deduction. I would definitely say that you can take a portion of it, but you got to be reasonable again on that. And then this goes for children of any age. So if you happen to be posting, say, Facebook post of you and your child selling particular products, you can use that as important. You have to pay your child for the advertising. You can go ahead and take that deduction there. So it has to be legitimate work, having done the audit thing before, and so you got to have the proof behind it. So like I have a couple posts for my my accounting business where I actually used my neighbor's dog. I paid to use my neighbor's dog. So, and yes, my neighbor's dog happened to be my brother's dog. So, obviously I was able to take a deduction on that just because at that point that's what I was able to do. Now, as far as the fringe benefits goes, that's a sticky area. I really don't want to get into that and misstep on that one. That can be you can run into a couple of issues with that. That would be more, say, if you did have employees, you had a bigger business type of situation. So that one, I'll leave that one be.
Yeah, we've never used that either, Jeff. Same thing.
And to clarify my point, I did all that at arm's length. So, I mean, if I paid my son for something, I had another person I was paying the same amount for or whatever. I mean, it was just strictly. Most of the time, because I had a fireworks business, they ran a fireworks stand and they were, 1099, or if they were, they were paid the same rate as anybody else that I employed. So it was strictly arm's length.
Yeah. And I think if you're listening closely to Jeff and to Jerry, don't do things that raise red flags. Like, don't write off stupid amounts of money on something. Be really, really conservative, cautious, correct, clean, honest, all the above. So we're not going to spend much time here because I have another Zoom at 10 this morning, so we've got to finish this in 10 minutes. But professional services and fees, That's easy. I mean, yeah, if you need legal help, tax help, all that's going to be deductible here, 100%. Interest and bank fees, we use, and Jerry does too, and I know Brent Palmer, we all use the same exact American Express Platinum card. And with that American Express Platinum card, it's a $450 annual fee. So that's deductible, because what the American Express Platinum card does for you is it itemizes every single purchase. So one thing, because my dad knows I'm terrible at keeping up with anything. So he wants, if I buy a Snickers bar, and I don't, I'm on the approved food list. If I buy a protein bar at a gas station for $1.50, he wants it on the American Express, or I can't write it off. So everything is there. And then Ashley is our bookkeeper. So what Ashley then, all she needs is to run the American Express report for the end of the month, and everything's categorized: supplies, food, lodging, all that stuff is in the American Express card. And then Jerry's going to share the app that also does the same thing. I think Jerry actually does both. He double tracks through American Express and app. Anything you guys want to add there?
No. One question that we do need to probably see if we can address is the Venmo.
Let's wait to the end for that, Ashley.
Okay. Okay.
Yeah, we're going to turn the recording off before we get into that world.
Okay.
So taxes, bad debt, business insurance, cost of goods sold. Cost of goods sold is very applicable here, meaning that anything you purchase to sell, obviously the cost of that, to include shipping, everything is 100% deductible.
And it's changed, our model has changed from when I first started, how we were doing face-to-face and doing transformation groups or whatever. Now, since we've had the revolution into selling skinny drops, I'm having to redo all of that, because now I have a higher cost of goods sold, because we are actually selling retail where we never did before. I mean, I say we sold bits and pieces, but now we're actually selling retail. So it is something to track.
So the big one here, we've already covered travel expenses. Don't do anything here that causes red flags, but I will tell you that being full-time, that we write off all travel expenses. I don't go anywhere I'm not doing business. I'm recruiting nonstop. I'm training nonstop. I'm answering phone calls nonstop. So I'm always geared in the business. But if you're part-time, you've got to be careful there, because when the auditor looks you in the face and asks why you wrote this off, you have to be able to document it to them. But again, lodging 100% deductible. So it is a neat deal to be able to go and tie in, take your kids to Florida. They're out playing at the pool, but you're only there for business, and it's just your kids got to go along with you. So it's a neat deal to kind of have a business/vacation trip together there. And I'm going quick just for time constraints. And some of these are, very self-explanatory. Charitable contributions, that you can actually do that with a W-2 too. So, any given to your church, given to charities, again, that's deductible, dollar for dollar. And I just put that in there because it was on the thing. It says, while IRS rules about home office deductions are very strict, it's not automatic that you'll be audited. So I always tell people that, and my dad warns me, the reason we had the conversation about my house writing off 50% is because that is a bit of a red flag on their system. So it could trigger an audit. So he was like, is that worth it? And I was like, well, it's 100% use for the business. I mean, it's honest if I'm asked. So we kept it. But that's what you want to ask yourself. Is anything I'm putting out there worse that auditor showing up at my house? Because when that auditor shows up, everything's got to be perfect. Anything anybody want to add there before we kind of cut that off? Because there's 157 tax breaks. We haven't covered near all of them, but these are the big ones.
I guess real quick, I would throw in there, if like you mentioned, you use the credit card. If you have your business stuff in one area where all of that's at, and God forbid an auditor does show up, all you have to do is then go, well, here's my credit card statements as the proof, as far as I would have to say 90% of your deductions. Obviously, your mileage, you're going to have to keep a mileage log and all that stuff. That I can go in with everybody if they need that. So if it, you use the Platinum card, there's several other credit cards out there that kind of do the same thing. I would definitely recommend it, and having one spot or one bank account where all of that information runs through. And mileage apps. There are a ton of them out there. I would recommend playing around, pulling them up, and seeing what you can do. But I would have to say, overall, good job, guys.
Right, so Jerry, this is the app that you use, the American Express Platinum and this app. So you kind of double track. But I know that you like this Hurdler app because it allows you, for everybody out here that's got multiple small businesses. Now, if you're just a W-2 earner, you don't really have to document things for that the way you do, because you're not going to have any write-offs there because you're a W-2 earner. That's the dirty little secret all employees don't know, is that they have no tax advantages. You've got to have a business to get into the tax advantage system. So share real quick the Hurdler system. I think it's about $10 a month for the paid system.
Yes. So when I found that through actually Courtney Epps so I went through her thing to do it. She offers a little discount if you're buying through her, and I think she has people that support it as well, and I've used them too. So you link in your bank accounts, your credit cards. So actually, I'm using the Platinum card as my documentation. Okay. It's my itemized documentation. But as far as the accounting side of that, all that's really done here. So now at the end, and last year, all I really had to do was, print out my profit and loss. I printed out, my detailed information for that. I put it in an envelope and sent it off to the accountant. So he had all of that plus my backups. So it really worked out good. I'm managing 4 businesses on this. Out of my, I don't know how many, 6 or 8, whatever. These are all, I guess, my personal, just me and Allison kind of deal. So I am managing an LLC on this as well. So I'm managing my partner co, my property company, and my fireworks, some of my fireworks. That's kind of a hybrid solution. But again, you said just like yours, I was traveling so much. My car is coming up on 3 years old, I guess. And I'm right at break even as far as writing it off, because I missed the time for the rebates and stuff. So I chose to do the mileage. So I'm right at break even now in 3 years. So, but what's good for me on the mileage side of it, now going forward, I'm beyond the expense of my vehicle too. So I think that's good. I would show it to you if you want me to. I have I've got it on a phone, or I can do it on the computer side of it.
Gary, I think we're not going to have time. It's
Okay,
9:52, and I'm up against a deadline today for another big Zoom. But we can do that another day. So Jeff, you got to remember that if you use Jeff or another CPA, they're only as good as the documentation you keep through the year. Because when Jeff does your taxes, he needs all of that, and then he does his magic on his knowledge base, passing that CPA exam that's hard to pass, and then get you all the benefits that's possible to get from the government. So any parting words there, Jeff? Matter of fact, Anthony, would you mind go ahead and stopping the recording here?